Hey there, future Warren Buffetts. Ever wonder how to make your money work as hard as you do? That's where investing comes in. Investing is like planting a seed for a money tree. You put your money into something you believe will grow in value over time. Why is investing so important? Well, it helps you stay ahead of inflation, that sneaky monster that eats away at your purchasing power. Plus, it can help you reach your financial goals faster, whether it's buying a dream home, retiring early, or traveling the world. Remember, investing isn't about getting rich quick. It's a marathon, not a sprint. It's about making smart choices today for a brighter financial tomorrow. Ready to explore the different avenues for your investment journey? Let's dive in. First up, let's talk stocks. When you buy a stock, you're buying a tiny piece of a company, like owning a single brick in a giant Lego castle. This makes you a shareholder, and you get to participate in the company's successes, and sometimes failures. The good news? When the company does well, its stock price usually goes up, and your investment grows. You might even receive dividends, which are like bonus payments from the company's profits. However, there are risks. Stock prices can be volatile, meaning they can go up and down like a roller coaster. If the company doesn't perform well, its stock price might drop, and you could lose some or all of your investment. Remember, investing in individual stocks requires research and careful consideration. Don't put all your eggs in one basket. Don't want to put all your eggs in one basket? ETFs are here to the rescue. ETF stands for Exchange Traded Fund, and they are like baskets of stocks. Instead of buying individual stocks, you can buy an ETF that tracks a specific market sector, like technology or healthcare. ETFs offer instant diversification. By investing in an ETF, you're spreading your money across multiple companies within a sector, reducing your risk if one company performs poorly. They are also more cost-effective than buying individual stocks because you're buying a bundle of stocks in one go. However, ETFs don't offer the same potential for high returns as picking individual winning stocks. If you're looking for a simpler way to invest in the stock market with reduced risk, ETFs could be your perfect match. Ready to dive into the tangible world of real estate? This involves buying, owning, and selling properties for profit. It could be anything from residential homes and apartments to commercial buildings and land. Real estate is a popular investment because it's a tangible asset. You can see and touch it. It also offers potential for rental income and long-term appreciation. Plus, you can leverage your investment by taking out a mortgage to buy a property worth more than your initial investment. However, real estate can be illiquid, meaning it can be challenging to sell quickly if you need cash fast. It also requires significant capital, maintenance costs, and dealing with tenants if you're renting out your property. Real estate can be a rewarding investment, but it's crucial to do your homework, understand the local market, and factor in all the costs involved. Let's switch gears to bonds, shall we? When you buy a bond, you're essentially lending money to a government or company. Think of it as giving a loan to your friend, and they promise to pay you back with interest. Bonds are generally considered less risky than stocks because they offer regular interest payments and the return of your principal investment when the bond matures. They are like the reliable savers of the investment world. However, bond prices can fluctuate based on interest rate changes. When interest rates rise, bond prices tend to fall, and vice versa. Bonds are an essential part of a diversified portfolio, offering stability and income, especially as you get closer to retirement. Remember the saying, don't put all your eggs in one basket. Mutual funds take it to heart. They pool money from various investors and invest in a diversified portfolio of stocks, bonds, or other assets. Think of a mutual fund as a giant investment club where everyone contributes money, and a professional fund manager makes investment decisions on behalf of the group. The goal is to achieve specific investment objectives, such as growth or income. Mutual funds offer instant diversification and professional management, making them suitable for investors of all levels, especially beginners. However, they come with management fees, and their performance depends on the fund manager's skills and market conditions. Mutual funds are an excellent option for investors looking for a hands-off approach and diversification without having to pick individual stocks or bonds. Let's get down to the basics, literally. Commodities are raw materials like oil, gold, wheat, and coffee. They are the building blocks of the global economy, used in everything from fuel and jewelry to food and construction. Investing in commodities can be a hedge against inflation because their prices tend to rise when the cost of living goes up. Commodities can also offer diversification to your portfolio because their prices often move independently of stocks and bonds. However, commodity prices can be volatile, influenced by factors like weather patterns, geopolitical events, and supply and demand dynamics. Investing in commodities can be complex and requires careful consideration of your risk tolerance and investment goals. Hold on tight because we're entering the world of cryptocurrencies. Cryptocurrencies like Bitcoin and Ethereum are digital or virtual currencies that use cryptography for security. Cryptocurrencies have gained immense popularity as a potential investment, with some investors seeing them as digital gold due to their limited supply and potential to hedge against inflation. The cryptocurrency market is still in its early stages, offering the potential for significant growth. And yes, significant risk too. However, cryptocurrencies are highly volatile, with prices fluctuating wildly. Their lack of regulation and association with illegal activities also raises concerns. Investing in cryptocurrencies is not for the faint of heart. It's crucial to thoroughly research, understand the risks involved, and only invest what you can afford to lose. Congratulations, you've made it to the end of our investment journey. By now, you should have a good grasp of the different investment options available, from stocks and bonds to real estate and cryptocurrencies. Remember, there's no one-size-fits-all approach to investing. The best investment strategy for you depends on your individual financial goals, risk tolerance, and time horizon. Are you a risk taker looking for high growth potential? Stocks or even cryptocurrencies might pique your interest. Prefer a more conservative approach with steady income? Bonds and real estate could be more your style. No matter your investment style, remember to diversify your portfolio, invest for the long term, and seek professional advice when needed. Happy investing!